Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Welcome back, Chris.
Hey, thanks for having me, Ivan. Always a pleasure.
Yeah, it's always a pleasure having you on, talk about silver and the gold market, and it's really exciting to see your thoughts on what's happening right now. It's time to talk about the economy, Chris. A huge question out there is, have we made it through the worst of the banking crisis, the mini one that we've seen in 2022, 2023? What are you watching?
Yeah, I think that's a good reference, the mini one. I think there could be a mega one coming again. I mean, there wasn't that much pressure applied, in my opinion, and
Right.
the banks kind of folded. So I think there could be a lot more pain. The Fed and the government, they always seem to say, "Oh, we've stress tested, things are okay. We're not as
Yeah.
bad this time. We know what to learn from." Yet a bank implodes in 48 hours, right? So I think there's going to be probably tougher times to come. There's going to be some unique things they're going to do to bail out and save banks likely, so that people don't think how fragile the markets really are.
Hmm.
But that might not be for a while. I think right now the stock market is ripping higher. We're seeing money pile into growth stocks, technology, and it's kind of a bit of a feeding frenzy right now, and that's fine. I mean, the markets are going up. I don't think it's going to last all that long. It still might last another month or so.
Right.
We might go up and see the indexes hit a double top in terms of the market. But then coming back to your question, then I think things will roll over and the economy is going to suffer. Banks, we're eventually going to see, I think, companies go bankrupt as things slow down, and that's when the banking system's really going to get hit because they're going to have lots of defaults, mortgages. The banking, I think, is a very long term, like look forward a long ways, many months, if not a year or two, for a lot of things to really start to fall apart there. That's where I think the big damage will be done to the banks. But I think
Absolutely.
maybe they have things under control short term wise.
Yeah, just short term, but probably not long term. And Chris, of course, where do you think gold is heading for now, from now until the end of 2023? Last time we were speaking was about a month ago when we were talking about the silver and gold prices. Has anything changed for you, or is it still the same outlook from now to the end of 2023?
I think it's pretty much the same outlook. I mean, we've seen a little bit of a bounce and rally in gold and silver over the
Right.
past week or two. But in the grand scheme of things, silver's kind of up near resistance zone. Gold is up kind of at resistance kind of near all-time highs.
Right.
I do think if the economy gets weak and we see selling going on, I do think we're going to see gold and silver pull back down. Likely the miners will pull back as well, just with the markets. The question is, how low will gold go? I mean, it could go back to 1800 very easily. It could go down to maybe 1600 again, pierce the lows that we saw early this year, or I guess it was late last year.
Right.
It might pierce those. To me, that's all bullish price action because all that's doing is it's just a continuation of this pause that we've had in the past 2 years for gold. The longer something pauses, the bigger the breakout. And that'll bring it back down to a support level. And it'll kind of be the start of, I think, the next major leg up in the commodity, the precious metals super cycle, which I think is going to last for 5 to 7 years from here.
Mhm.
But again, this is a major cycle. So another pullback for 6, 8 months isn't a bad thing. It's just a pause going forward.
Yeah, so basically you're thinking the next 6, 7 months, it could go a lot lower or even a little bit lower. And then after that, in the long run, as the US economy starts really getting hit, then you'll think silver and gold is going higher. Is that correct?
Yeah, that's what I'm guessing. I mean, there could always be a piece of news, something that changes in the
Right.
industry, like a gold backed currency that could create a feeding frenzy.
Yeah.
Because now everybody thinks, well, I hold gold, and they're gonna, as people move to that currency needs to attain more gold to back it, right? So if that was to happen, I think there could be a massive feeding frenzy for gold. I actually talked about this with some traders this morning, saying, the markets always have seem to move in a way that most people are on the wrong side of. And
Right.
most people are super heavy weighted as silver stackers. They all want to be in silver. And I talked about this years ago, saying there could be a point where actually gold ends up taking the lead,
Right.
because something like this could happen. We get a gold backed currency, and now the whole world wants to move into something that is backed by a physical asset, and gold goes absolutely ballistic. And if you look at the difference right now, silver's down 50% from the highs, nowhere
Right.
near the highs. Gold is right up testing, pushing all-time highs. It's not that far away percentage wise. So, maybe gold is foreshadowing, hey, there is something coming, and gold is a currency, and it's soon going to be backing a currency. So that's one thing the market is great at doing, is throwing people off track. I mean, silver percentage wise will most likely catch up and blow past gold,
Right.
but during kind of uncertain times, gold holds up a lot better, just because the whole world naturally seems to accumulate gold. More so, silver is kind of a speculative, people trying to make a ton of money when it does rally. It's a
Right.
bit different. There's a different group of people that kind of buy gold, and they kind of hold gold. They don't flip it or sell it, or panic out, because it doesn't have the volatility that silver does, that can apply a lot of pressure and fear on people when it drops.
Right. And looking now for the end of 2023, we mentioned in the beginning of the interview about the banking crisis. Do you think that can spread over to commercial real estate? And how can this banking crisis, let's say in 2024, as it gets bigger, how will it affect real estate, commercial real estate, and what will that do? What are you watching there?
Yeah, I think it's going to bleed over into commercial real estate. I think commercial real estate's struggling. I mean, a lot of
Right.
companies are trying to pull their employees back in, saying you got to come in for a couple of days a week to work now, right? A
Yeah.
lot of employees are like, "Well, I like my home office. I'm set up. It's easy." So I think there's going to be a big problem with commercial real estate. I think the commercial real estate in a lot of cities could end up changing the zoning to say, "Hey, you know what? We're going to change potentially some of the floors in these commercial buildings, or some of these commercial buildings, to allow residential, like
Wow.
whole floors of buildings commercial don't have employees in some spots. And it's either people go bankrupt and banks go out of business and towns suffer, or they adapt and say, you know what, we're going to also have residential floors within these commercial buildings, so you can live and work in the same building, but you do go to work, and that would help save, I think, the commercial real estate, because now that commercial property is now has another use.
Right.
And right now, I did an article about 2 weeks ago on real estate, and right now we're seeing a huge pop in multifamily dwelling new starts, and we've seen this every time just before we've gone into a housing crisis. We saw it in 2007. We saw it. We're seeing it happen again now. It happened a long time ago, back before the tech bubble too.
Right.
When there's not much juice to be squeezed out of the real estate market, like everything is already very high priced. The only other spot you can move to is multifamily, because it's a cheaper real estate to build. There's shared walls, shared ceilings. You got all kinds of different benefits to it. And so
Hmm.
that's where developers are going right now, because it's the last place to squeeze money out of this market. And after this, we go into a multi-year kind of pullback in real estate pricing. We see lots of supply come on the market. People get to pick which house they want. The prices go down because everybody's trying to sell. And people who've got vacation homes and they're over leveraged, meaning they bought a house at a premium and now rents start to go down. They
Yeah.
can't cover their mortgages, which this then falls onto the banking problem again that we talked about initially. So there's this huge cycle, this whole wave that has to take place, and the pressure will eventually fall onto the banks down the road. So there's tough times, I think, coming, but this is a slow moving cycle that could take still another year or two or three to come full cycle in terms of the housing and the commercial real estate and residential.
Right. And that book behind you, that's called Asset Revesting. Is that your book?
Yeah, so that's a book I published in May, and that's based around my strategy, where I'm constantly rotating our capital to an asset that is moving up. And it's we don't diversify. It's a
Right.
very different strategy than everything else. So if something starts to go down or sideways, we actually move out of it. We'd rather sit in cash and collect interest every month
Smart.
than take on the risk of holding something. So we just constantly rotate to different assets, so that our account's literally always going up, whether it's through interest or through a rising asset. It doesn't matter. And it's a very powerful strategy. Yeah.
Nice. Yeah, that's super interesting. You wrote that just this year?
Yeah. Yeah. In May this year.
Nice. Nice. Where can people find it? I'll put a link in the description for you.
Sure. Yeah. They can go to Amazon and they can pick it up there, and yeah, get it there.
Awesome. Now heading back, talking back about precious metals, we understand your outlook, for the next like 6, 7 months. You don't think it'll go that much higher. It could actually go lower, and then later on it'll go higher. How trapped do you think Jerome Powell is and the Federal Reserve right now with what they're doing with interest rates? Are they ultimately trapped, or do they know what they're doing? What do you think?
I don't know. I don't actually get too involved in news and the Fed and all that stuff. I think I mean somewhat they're trapped. No matter what they do, they can't win. It's going to
Right.
affect something on the flip side. It's just a tough situation. Do they know what they're doing? I don't know. So many people say they have no idea what they're doing.
Yeah, that's
They
right.
are stuck in a tight situation. Now, the thing that they have done, and I talked about this like a year ago, I'm like, if the Fed doesn't start loading their gun with quarter basis points to like
Right.
when we get into a recession, they need to start like lowering rates. And that's what saves them. And they have just literally loaded a machine gun. They've got how many quarter basis points can they cut to save the day? So they have
Yeah.
reloaded and they're good for, I think, very, very tough times. The higher they get that rate, the more bullets they have to keep just trying to softening the blow
Yeah.
as things get tougher and tougher. So yeah, they just keep loading it with more rate.
Yeah, so they have more room to play with later on.
Yeah.
Chris, what other things are you looking at other than silver and gold? On your strategy, do you look at other commodities? Do you like what are you looking at right now that's helping your portfolio?
Yeah, right now, I mean, we only get long one asset class at a time. So equities is one asset class, like
Interesting.
commodities would be another, a currency would be a different. So we only get into one asset. And right now, the stock market has been on fire. We're long, the NASDAQ, we're long the SP 500. Those are our core plays. We use the single ETFs. We also trade the leveraged ETFs. So we're up like, 18 to 40% on the indexes right now,
Wow.
depending on the positions. And that's really where the easy money has been. We've been in this, what I call is a stage three topping phase for like 2 years already,
Hmm.
where 1 month sectors that are at the top of the list, the best performing, about a month later, they're at the bottom of the list and there's a whole new batch of hot sectors. So we're in this rotation, sector rotation. People don't know where to put money. Right now, it's quickly back into tech and growth stocks. But only about a month and a half ago, consumer staples, the food and beverage industry were the top leading sectors. So this is a very tough market. The easy money is in trading the indexes, like trading the overall index itself. Stocks are either
Right.
going up or going down, not trying to pick a hot stock or anything like that. And when stocks fall out of favor, who knows when that's going to be in potentially a few days or a few weeks.
Right.
Then we're going to look to a different asset. We could move potentially to the US dollar, whether it's falling or rising. There's an ETF for that. As long as it has a strong trend, we can benefit and grow our account and move away from the volatile stock market because the currencies move a lot slower percentage wise. So
Hmm.
when things get crazy, we usually step down our asset hierarchy to slower and slower moving assets. So that kind of counters the volatility and we can still jump on something that is rising.
Yeah, no, you absolutely nailed it. Well, Chris, it's been a huge pleasure you coming down to Wall Street Silver. Before you leave, though, could you leave our audience with some words of inspiration, or what you think you're seeing in the economy next, or your last words, even?
Sure. Yeah. I think the key here is to not get too sucked into this rally. I
Right.
think you got to be long the equities market, but a lot of people are under the false belief that 2022 is a bear market. And right now we're starting the next bull market. Yeah, we're in a little baby bull market, but that's about it. I think. Don't get committed and think you're going to hold and go for another 5 or 10 years to the upside. This to me is just a false rally, a complacency rally, and
Right.
things could be looking really bad, 6, 8 months from now. So have an exit plan. And most people don't have an exit plan, unfortunately. So
Right.
you need to pick a level saying, if it drops to here, I'm getting out and I'll wait for a new opportunity to get in. So just don't get stuck into this false kind of bull market phase, I think that we're in.
Wow, that's really it's well said, Chris. And it's such a great pleasure having you speak to Wall Street Silver. And as always, we'd love to have you back on in the future, hopefully in the next 2 to 3 months. Because if you come back and then we talk about silver and gold and see where it's at, we'd love to have you
Yep.
back on.
Sounds great. All right.
Awesome.
Thanks.
Talk to you soon, Chris.